Hello and welcome to a Smaulgld special update on the dollar and U.S. Treasuries. Trump shift to China. Is this a dollar protection strategy? The United States deficit spending has been supported by heavy foreign buying of U.S. Treasuries over the past few decades. Will recent dumping of U.S. Treasuries by China and other nations continue? Do China's de-dollarization initiatives and a proposed gold payment system with the BRICS presage game over for the dollar? See some background. Now, Donald Trump met with the Chinese premier or Chinese president while missiles were raining on Syria. While the United States was launching a missile strike on Syria last week, President Trump was eating chocolate cake with Chinese president, and later the Trump administration announced that the United States will not label China a currency manipulator, even though that was a campaign promise that China had been, quote, ripping us off for years, and they were going to be named a currency manipulator. Now, while China remains on the U.S. currency manipulator watch list along with Japan, which is the largest holder of U.S. treasuries, Germany, South Korea, Taiwan, and Switzerland, the label will not apply to it. Donald Trump tweeted quite publicly, "Why would I call China a currency manipulator when they are working with us on the North Korean problem? We'll see what happens." Now, this decision not to label China a currency manipulator may be part of a broader dollar protection strategy. It probably goes further than just getting China to help with North Korea. It might reflect an enticement to buy and hold U.S. treasuries. These game over predictions for the dollar may indeed be yet premature. We've been hearing game over for the dollar literally since 1971 when the U.S. went off the gold standard. We heard it was game over when they did QE a decade ago, and now we're hearing it's imminent. It's always been imminent that the U.S. dollar is on its way out as the world's reserve currency. And one thing you have to give the U.S. credit for is that it has managed to hold on to this position since 1944, which is quite incredible because most fiat currencies do not last this long, and the U.S. dollar has shown tremendous resiliency. And there may be many more decades ahead, and I'll explain why. There's two reasons that China is probably not going solo with its BRICS partners down the yellow brick gold road. One, China has massive trade with the West. We're going to show you some charts on the GDPs of the nations that China deals with. It also holds $1 trillion in U.S. treasuries. So to abandon overnight the United States and its partners to deal with the BRICS would be ridiculously foolish. Not only would they lose their entire treasury portfolio, they could lose a good portion of their trade. The second reason is China, as we'll see, loves credit too. China is not a sound money country just because they like gold. We're going to talk about that too. We're going to take a look at some charts on that as well. Let's quickly look at the history of the dollar, the world's reserve currency. So in 1944, the U.S. dollar was selected as world reserve currency at Bretton Woods, New Hampshire. You probably all know that story. The idea was that the dollar was to be at the center of the international monetary system, and it was to be redeemable in gold. And then in 1971, Nixon closes the gold window, basically tells all the other nations that dollar that used to be as good as gold, you could redeem it for gold, you can't do that anymore. Now that should have been game over right then and there for the dollar, but it wasn't. Nixon did a couple of things with Kissinger. By the way, then since then, the deficit spending has exploded, which was one of the concerns that the member nations were concerned about in the first place, and why they were coming to get their gold was that the United States was starting to run trade deficits, and that was the reason that Bretton Woods failed, was because countries came for their gold. They were concerned there wouldn't be enough gold, and they were proven right. And Nixon said, yeah, guess what? There isn't enough gold. That's not going to stop us. And they continued, the United States has continued to do increasing amounts of deficit spending. And the dollar really is still around and versus all the other currencies remains relatively strong. But after 1971, before the petrodollar deals were set up by Nixon and Kissinger with the OPEC nations, Saudi Arabia, to make those countries price their oil and gold and accept only oil and dollars and accept only dollars for the payment of their oil, thus creating demand for the dollar and reestablishing it as the international currency because all countries needed oil. And if those OPEC nations were going to price their oil in dollars and only take dollars, then people needed dollars. So people accumulated dollars and used dollars in international trade. But prior to that, Nixon visited China almost a few months after he closed the gold window in 1972. He went to China, basically opened up China. By opening China, it started the process of making China a trade partner. It didn't happen overnight. It took a while, but Nixon began that process of dealing with the previous taboo of dealing with communist nations and in a sense drove a wedge between Russia and China. Now Russia and China, you would think, both communist at the time. You got the Soviet Union in 1972. You got People's Republic of China in 1972. You would think they'd be allied against the United States. Well, not necessarily. Russia and China go far back, not as allies, notwithstanding their more recent 20th century communist alliance. They are not natural allies. And Nixon and Kissinger saw that one way it might be advantageous to the United States to go to China, open relations with China, and then kind of draw a wedge between Russia and China. Could be the United States is doing exactly the same thing now with Trump's cozying up to China and, in a sense, attacking Russia through those Syrian missile strikes. Then you had the petrodollar 1973-74, and that's remained in effect. Countries still use dollars predominantly in international trade. The Saudi Arabians take only dollars for their oil, and they price their oil in dollars. And things went along, even though that was an incredible default in 1971. Countries kind of accepted the fact that the dollar was the world's reserve currency, and they would use it. Then after the financial crisis of 2008, the Fed did pretty much an unimaginable slap in the face to any country holding dollars, and it just started printing them and did it through the purpose of, through the policy of quantitative easing, which was money printing. They just printed out of thin air $4.5 trillion. And that annoyed especially China, who had spent the prior decade selling trillions of dollars worth of goods to the United States and receiving dollars in exchange. And then they were buying U.S. treasuries, and they felt that the Fed was basically undermining their dollar position. And then the Fed didn't stop. They did 3 QEs. They did one in 2009, they did one in 2011, one in 2013, and they kept getting bigger, and then they had the interest rates down to 0. Well, at that point, the de-dollarization began. You had China in October 2013 openly calling for the world to de-Americanize, and the famous quote was, because the destinies of others are in the hands of a hypocritical nation, i.e. the United States, that have to be terminated. And then in 2014 to 2016, China started a public drive towards adding gold to its reserves as the People's Bank of China, and started to sell U.S. Treasury bonds. Now you would think, well, this is another time where it's looking to be game over. You can view 1971 and 2009 as very similar. 1971, the United States basically tells the world to go pound sand. You're not getting your gold, but you're still going to use the dollar. Treasury Secretary Connolly, late in 1971, told his G8 or 7, whatever the number was at the time, counterparts that the dollar is our currency and you're a problem. And basically that's what the Fed did in 2009 to 13 when it was printing dollars. He said, yeah, it's our dollar, your problem. Well, we're going to print them. We're going to solve our issues here by printing, and you're stuck with it. Well, it looked like the world had had enough, or at least the a good portion of the world, starting with China. China was working with its BRICS companions, Iran, other countries, in de-dollarizing and trying to set up alternative systems. One of the things, just quickly, that China had done was it had set up an Asian infrastructure bank. It got a lot of countries to join, including Western nations. It set up a Chinese international payment system, which was the answer to the SWIFT system that the West used. It created yuan clearing banks across the world, yuan swap facilities to create yuan liquidity. It sold U.S. Treasury bonds, and it also started increasing its gold buying, importing, and adding gold to reserves and announcing their gold reserves monthly to the world. Now, it's still not over yet for the dollar. Here's why. The dollar still has a near monopoly position in the world trade, and the U.S. has a monopoly-like military and economic power to enforce that monopoly. That's very important. So, the first point was that China has $1 trillion in U.S. treasuries and massive trade with the West and its satellites. But something curious came out in the U.S. Treasury TIC report just recently, earlier this month, or yesterday. The Chinese had been selling their U.S. treasuries for quite some time. And you can see in this chart, this is May 2015, and they were going down, down, down. And since Trump got elected, they've added about $10 billion in U.S. Treasury securities. Now, we could be, this is early, but I like to spot things early because it is a little odd here, that the Trump administration is making some type of deal with China to add back its holdings of U.S. Treasuries. And in exchange, they could get not labeled a currency manipulator, they could go lighter on their trade deals, and so on. But the United States is definitely cannot afford to lose the foreign demand in holdings of U.S. Treasuries. They can't. The United States can't afford its deficit spending, and it needs the foreigners to continue to buy them. And it looks like, and the issue with the TIC report is that even though it's April, they just reported February. We won't know till May what the March numbers are. But if we start to see this tick up, you can think that maybe there's something afoot between the United States and China, some type of deal to get them back into the buying of U.S. Treasuries. Now, here's an interesting thing with gold. People's Bank of China's gold buying has leveled off and basically stopped again since Trump came into office. Now, we've talked about this in the past. Sure, China still has a demand for gold. We're just talking about the People's Bank of China. And they have increased their treasuries and flatlined their gold. It seems to be a start of a trend, and maybe it isn't. Well, we're going to keep an eye on it. But here's another important point. The trade with the West is far more lucrative for China than the trade with those BRICS nations. The BRICS are Brazil, Russia, India, China, and South Africa. Okay, the idea that they're marching down this exclusive preset gold payment road where dollars are not used, I think is misguided. China must be acutely aware. I mean, they are aware. They're not stupid. They know that the West accounts for the bulk of their exports. Not Brazil, not India, not South Africa, not Russia. Indeed, the GDP of the US, Eurozone, Japan, Great Britain is nearly 8 times, these are just the countries in the SDRs, larger than the combined GDP of Russia, Brazil, India, and South Africa. So, when you talk about the BRICS, basically the BRICS economically are China. South Africa is not really a strong economy. Russia is not a strong economy. Russia has some natural resources, has a nice oil-based economy, but isn't really doing that well. India, for its size, should be doing a lot more GDP than 2 billion. And Brazil, again, big country, a lot of people, a lot of resources, some growth. But again, it is not at the same level of development as the other countries are in the West. So the combined GDP of these 4 countries is only $5.5 trillion, according to the World Bank. If you look at the GDP of the SDR nations that China is now part of, without China, the GDP of the US, Eurozone, Japan, and United Kingdom is 41.593 trillion. As I said, nearly 8 times more than the trading partners in the BRICS nations. Now you add in the GDP of other nations under the US aegis. It's Australia, 1.3 trillion in GDP, Canada 1.5, Switzerland 0.67, Israel 0.3, Chile 0.21. You add another 4.1 trillion, which is almost equal to the total of the BRICS nations, these other countries that are in the US orbit. And now you're definitely more than 8 times the GDP of the BRICS nation. So China is not going to just write off trade and relations, and they may try to make their own deals with these other nations. But remember, the United States somewhat controls these other nations in its orbit. And the United States controls the IMF. So China is now part of the SDR, but that is an IMF creation. And here's another point. A lot of people think that China is this, because they like gold, or this wonderful place that embraces free markets, sound money. It doesn't. China loves credit. Just because they love gold, it doesn't make it a sound money paradise. It's not. Notwithstanding their love of gold, China is a centrally run, top-down, credit stimulus-driven economy. It's communist. They don't believe in sound money. Just because they like gold doesn't mean they want to back their currency with gold. They want some type of sound policy. What they want is flexibility. They want government power. They don't want to be restrained by gold. China's not concerned with deficits. They're concerned with operating an economy that will keep it in power, that will keep the peasants satisfied. Sound familiar? That's what politicians in big governments do. They promise the people something. They build ghost cities just to give people work. China is not a sound money country that is going to save the world from the United States because they are engaged in credit creation. They're just not as far along in doing it. It took the United States decades and decades to run up to $20 trillion worth of deficit. And it's something that as you build it up, it starts to snowball. At some point, I think China would probably want to be just like the United States and become a net importer of cheap goods itself from other countries in Asia and Africa. Remember, the United States was an industrial powerhouse. It had trade surpluses like you couldn't believe. But when countries get rich, they figure, well, if someone else can do the work, then we'll just use our dominance, our power, our currency, our military, and have other people do it for us. Don't you think China wants to follow the same path as the United States and get people in Africa and Asia to work for them? Well, look, Zero Hedge posted this. In Q1 2017, China's aggregate credit creation hit a record high. Look at that. Look from March 2002 up to here. They are not a sound money place. They do not want to be restrained by gold. They want gold as a symbol of wealth. They want gold to have, but they don't want gold to restrain their entire economy. They can't afford it. That's not what they're based on. No centrally planned economy can ever be friendly to gold. You may want to have it, but you do not want it to be set in stone that you're on a gold standard. That is the worst thing for a centrally planned economy. And finally, China's part of the club. They love credit. They're all in the same fiat money printing, low interest rate QE club. With the gold standard, you can't get fixes. They don't want that. They prefer a system where maybe everyone can cheat, because under a gold standard, you can't cheat other than lying about how much gold you have. But when you're in a fiat system and you have a problem, you print money, you lower rates. You basically do what you feel like doing. And China's not going to want to be restrained by gold. So, yes, a gold would be a challenge to the dollar, clearly. And it was proven, if you go through the Smaulgld CIA reports on gold, countries always would prefer gold to any other currency. Chinese yuan, US dollar, it doesn't matter. Even a dollar, even a gold-backed dollar, we saw, people would rather have the gold than the promise of a dollar that would pay gold. That's a fact. So a gold-backed currency would be, quote, game over for the US dollar, perhaps. But they're not going to, China's not going to back its currency with gold on an international level and run its finances tied to a certain amount of gold. That would slow their economy. They're not interested in doing that. That would not allow them to run up this type of credit that they're doing. Well, it could to the extent that they had the gold to back it, but as we saw with the United States, that is a position where once you start building your credit like this, it doesn't end. It becomes a Ponzi scheme. So I don't think, as long as we remain in a fiat currency system, that the US dollar is at much risk for, eventually it will be. I mean, the Chinese, if they continue at their current trajectory, will become more powerful and their currency will become more powerful. But the idea that it's game over imminently, we've been hearing that since 1971, and I don't think it's going to happen. At least it's not going to happen next year. It's not going to happen the year after that. Thanks for listening. What do you think?